It is, what is it, June 22nd, 2022. This is the video log. It takes 30,000 to a million. It's a down day, slightly down. I'm going to do the account review. No hype over here, no edits. Just going to go through the account, show you all my positions, and then run you through some of my trades. I'm trying to look at my sound level, sorry. Pancakes. Pancakes. You're supposed to say pancakes to test the sound, by the way, if you don't know. Instead of like testing 1, 2, 3. Testing is a good word too, but pancakes, it's got the the pop, and then it's got a lot of S's, and then it's got a loud A in there, so you can test that. Anyway, a little bit off topic. Just a slight bit. So I'm going to take through the account, show you my positions, run you through some trades, and then I'm going to make another video on Paramount, because Paramount's got another down day today, so we'll see that in a second. And I want to make a video. I'm going to probably make it right after this one and release it right after this one too. So anyways, going into the browser. The browser's had a tough time loading some of the charts, so sorry if they take a while. But I'm about flat on the day, honestly. I just, as I mentioned in the previous video, the day was going to start lower. And it did indeed start $4,000 or $5,000 lower, but it climbed back up to positive territory in a volatile manner as per usual for this account since it's leveraged, and then finished about flat, down $563 or so, and then another grand in the negative in the after hours. As far as the options positions, they're listed on the right there. I'm going to run through all of them real quick. You can pause the video, play it at any moment to try to figure out the exact position. All the information you might ever need is in this box right here, and the daily change of valuation is represented on the right by the white and green or red numbers. The top number is the valuation change in dollar terms, and then the bottom one in percentage terms of this option position. Alright, now if you notice, I have some tattooed shaft shorts in the short run here to try to protect myself from some downside in the near future. I don't know, it's just a hobby short. It's gonna probably cost me $100 for no reason, but we'll see. Maybe it hits. I also have a Paramount call option, a $25.50 call option here, expiring by the end of the week in a couple of days, so we'll see if that materializes or not. And then I've sold the Smith & Wesson calls again, so I've rolled them for another month or so. And that's going to bring me in $600, and hopefully Smith & Wesson goes up to $15 per share so I can get rid of the position, but it might not. It could still stay under value. Why not? I mean, the entire market is running at like 1 or 2 price to earnings ratio, so I wouldn't be uber surprised. And then we have JD, VipShop, and Alibaba long-term option buys, or leaps as they like to call them. Moving on to the equity positions, Apple is down 1.26%, or $1,500 for me. I have a large position, by far the largest one in the account. And whenever Apple sneezes, my account catches a huge cold, bronchitis. Okay, so saving my account today somewhat is Realty Income and Main Street Capital, my 2 dividend payers that pay me monthly, now almost to the tune of about $300 per month. So that's combined, so that's great. Goldman Sachs is barely down. I have 155 shares of that now. And then Smith & Wesson is called out, so that's almost irrelevant. Paramount, I still haven't really sold any call options against Paramount, so that's a really hot topic now in my account. Current value is $34,000, 1,400 shares, so quite a sizable position relative to the rest of the portfolio here. I only have a couple of put sells at the $24 level, and I have that call that I bought, and then also I sold 2 calls at 24.5. So we'll see if any of those make money by the end of the week. I mean, one or the other have to. So going to the investing tab here, 277, about a grand higher than it was yesterday. Margin used at 41.66%. You gotta double that, so it's about 84% margined out. When it's 50% here, that means that half of the account is borrowed money, which means I'm 100% leveraged. This is the account sorted by total returns. Opposite the head at the moment, followed not that closely, by realty income and VIP shop. By equity, Apple number 1, Goldman Sachs Main Street, Paramount, taking up the number 4 spot. Very sizable. Now, what moves did I make? Well, the main move that I've been making is I've sold some puts against Paramount and Goldman Sachs. I now have only 1, 2, 3, 4, 5, 6, 7, 8 positions. AM's in my bank account. Not yet. Anyway, so Paramount, quite sizable. Goldman Sachs, I've also been trying to sell a call against Goldman Sachs, but it hasn't happened yet. I mean, I can't really do anything about it if it keeps dropping like this because, I'm stuck with this collateral, and I do think it's a great collateral. It's very well valued, especially, a lot of the financial, a lot of the stocks in the financial sector are actually really, really well valued right now. There used to be this mantra, right, in the stock market where the banks would actually benefit from higher rates because, they get to collect more interest and all that. But it seems like, if the rates are still under the inflation rate, then the banks don't seem to like that too much. So I guess what the inflationary environment really matters when it comes to the valuation of these banks or these finance companies. Goldman Sachs not a traditional bank per se. It's an investment bank and a market operator. So, but anyways, they're making a ton of money. Their dividend is almost 3% now. So I don't mind holding it for a while, but if it reaches 310, I would like to go in to the options here and sell a couple calls at the 310 level. But look at this. Right now, if I run through the option wheel here, it's just 1 cent, right? I'm not gonna bother for $1. So I have to wait for this thing to appreciate. One other option I have is to go out a week or two in the future and try to sell calls against, Goldman Sachs. But that's only $30 here for July 1st. Maybe July 8th will give me something. Because that might be the only option I have. Because collecting weekly premium is not really working anymore. So 3 weeks out, I can do $81. Divide that by 3. It's like $27 worth of premium per week for that position. But I don't know if I think it's better probably to just wait, because if Goldman Sachs pops, I could do away with those $75 in exchange for maybe $300, $400, $500, depending on how far up it goes. So I'm waiting for that pop in order to start selling some calls here. So that's the move. And same thing with Paramount. I needed to go because I bought most of these shares at around the $30 level. If you can see here, I have an average cost of 28.73. But 1,000 of those shares were collected at the $30 level. So if I decide to sell calls $30, I would be getting nothing. $2. If I go out a week, I'd be getting $3. It's just absolutely nothing. Couple weeks there. Couple weeks ahead, $3. Let's do a few weeks, like 3 or 4 weeks ahead. So like a month, I'd be compensated $9 for my troubles. So 9 times 10, that'd be $90. It's just not worth it. Plus, what if it, I think Paramount is extremely undervalued. So if that thing pops, it might even blow. You could go from 25 to 30 in like a day. So I don't know what the play would be from there on, but it's just very, very tough right now. I think the best thing I can do at the moment is just stay put and wait for a little bit of a pop or bounce back. We had somewhat of a bounce back yesterday, but I was hoping for some follow through today and tomorrow maybe, but it seems like the market's flat to down. It doesn't really want to go up. I think there's been a lot of like scary commentary coming out from Jay Powell and officials and financial media, and basically they're pricing in a recession like as a sure thing. Even our boy Elon's out there and speaking to Arab princes and what have you about the extremely high likelihood of a recession in the short term. For all I know, we could be in it right now. That's fine. But the way that I'm looking at these stocks, they're priced for a pretty severe recession. Excuse me. Something like 2008-ish, or not quite, but something close. These valuations are very attractive, and there's a lot of bargain hunting to be done. So, anyways, let's take a look. I think that's let's do the charts. So this is the week performance. We got up 2.29% month. Oh man, yeah, they take a long while to load now. I don't know why, but for some reason, this is the year chart, -4%. But the point I was trying to make here is I'm actually still beating the market. So 1 week 2.29, and then 1 year down 4. Let's take a look at the SPY, which is an exchange traded fund that tracks the S&P 500. Let's see, what is it? The 1 year chart, -11 versus my -4. So I'm beating the S&P 500, but I really like to be not in the negative. Would not like the negative. So 3 month is 16, 1 month is -4. So -4, -16, -5, let's say, -16.5. Let's see what I'm at. Well, it won't load, but I think I'm actually doing better. I think I'm better than the SPY and all the metrics, which is still good, but it's not good that all of us are losing money. You know what I mean? That's probably not the optimal scenario. I'd rather the market be up and me up be more. So anyway, let me know how it's going with you guys on your accounts, and I'm gonna get started doing that Paramount video. It's gonna be good because I have like a ton of charts. They're prepared for viewing, so I'm gonna make a nice positive case on it, and so look out for it. Probably today or maybe tomorrow, but maybe just later today. I'm gonna get started right now. All right, peace. That's it for now.